Hey, what's happening, guys? Dan Dario here with another Options and Play video update. We are getting into June, and typically that leads to a little bit of a slowdown in earnings or scheduled earnings. What you'll notice is for the next couple weeks, there will be big names, but they're going to be a little bit fewer and farther between. And what will be interesting as we get towards the end of this month is whether we start to see some unscheduled guidance, kind of like what we had in March, because a lot of companies this quarter suspended their guidance going forward. So as we get to the end of June and the companies are preparing their numbers for July, could start to see some guidance, but we're probably still a little ways away from that. That being said, there are some interesting names this week. Before the open on Monday, Thor, THO, priced in at about 12.5 points. Those are monthly options, though. RV companies really been bid up into summer travel season, so I guess this will be interesting. Expectations are pretty high, though. I mean, after the stock has basically gone up 200% since March, it's low. And there's been a lot of positive commentary on this group. This isn't something I've traded much in the past, but maybe this time around it's different just because of everything that's going on in the world right now. So maybe something like a lower debit, speculative. Also, the option pricing, I guess, isn't too bad for a move either way. So maybe like a lower debit volatility strategy, actually. After the close on Monday, Coupa, so software stock, about 24 points is what's priced in. Momo growth software stocks are definitely running a little bit low on momentum recently. This has had a huge run. Expectations and the option pricing to me seems very high. So I think I prefer to see what they say, see what the stock does, and maybe look at it for a swing trade. But I'm thinking I'm probably going to avoid options into the report on this. Stitch Fix, about 5 points is what's priced in. This seems like an interesting setup. Typically, pretty big move on earnings, and I imagine this quarter more of the same. It's at its best level in several months. Closed the gap from March. Massive short interest. So decent number could trigger a pretty big pop. Pattern does seem more bullish to me, but it also has a history of dropping pretty hard when it misses. So I think like a staggered strangle on that. For the open on Tuesday, Signet. Now, 3 days ago, this was interesting. After the move that it's had over the last 3 days, which is at one point was almost 75%. I don't know, maybe less so. The price in 275 for next week, but I mean, after the run it's had, I mean, I feel like the trade has just completely changed. So it's just a lot tougher now. I really don't know what to expect. It is again another name that's really heavily shorted though, and that can kind of amplify moves in other directions. So maybe that's like a game time decision trade for me. Also, Tiffany's, but they're getting acquired, so I'm not going to be doing anything with that. After the close on Tuesday, Chewy's. So 7 points is what's priced in, and the big question is whether it breaks the earnings pattern because it's been a dud on each of its earnings reports since coming public, and this quarter they're pricing in a pretty big move. It would actually be by far the biggest move that this stock has ever had on earnings report. So, um, it's like the stay-at-home trend should be a tailwind, but the high option pricing makes me a little bit nervous just based off the history of just really not doing much of anything on its earnings reports. So I'm really on the fence with this one. I don't know how I'm going to approach it or if I'm going to do anything with it at all. Five Below, 10.5 points. That's what's priced in. Dollar General was good. Dollar Tree was good. So now it's Five Below's turn. It occasionally has some big moves, and the way retail's moving, I think I'd prefer to focus more on the bull side. But I do think I'd have to get risk down because 10.5 does seem to be a little bit more on the high side, especially after the run it's had off the low. All right. Before the open on Wednesday, United Natural Foods. So 375 is what's priced in. Those are monthly options. They released preliminary results here, and you can see the stock just went absolutely parabolic. So it's a little bit tougher of a trade into the actual report. I mean, it does look solid technically, And I mean, it does seem like there's possibility for higher levels from here, but I typically avoid companies that guide early. So it's either leave it alone strategy, or maybe it's something longer term, to see, kind of like view it more as like a swing idea. After the close on Wednesday, there's really nothing of interest. Before the open on Thursday, actually, really only like one name, too, and I'm not even sure I'm not interested in it. Children's Place, 10 points is what's priced in. I have occasionally traded this in the past, but I just don't really know what to make of it this quarter. Store's been closed. Expectations are low, but the stock has also had a pretty big run. Option pricing to me seems pretty high, too. So I just, I feel like it needs like a very, very, very big move. And I don't know. Like, I'm not seeing it. So I feel like I'm just better off avoiding it. But I mean, I could potentially take a look at it if it like rolls back down into like the mid 40s. That would be a little bit more interesting to me ahead of time, because this is Thursday before the open. So there's a few days for it to move around before then. All right. After the close on Thursday, the two big names next week. So first up is Adobe. About 19 points is what's expected on that. Definitely the biggest tech name of the week. Software stocks, like I said before with Coupa, I mean, definitely kind of hit the pause button, but Adobe is right at its 52-week high. So I'm kind of curious to see if this can like maybe break the streak, because a lot of like the software stocks really haven't been rewarded for earnings over the last week and a half. Um, it's consolidating. It's in like a range above its high. Last couple quarters have been decent, so it does seem like it's set up for higher prices. But at 19 points, I think anything I would do on the upside would be either speculative or much lower debit. I have to get the risk down somehow. Because 19 points seems pretty high. Lulu. So 18 points is what they're expecting on this. Big retail report. And I mean, this stock has been just crazy. I mean, just nonstop up, like week after week after week. It's really hard to know how high expectations are. They haven't given any guidance, though. So I do think it's going to be volatile. But after the move it's had and compared to like basically all of its peers, I feel like more of the risk is to the downside at this point. Um, so maybe another one I look at like a staggered strangle, but maybe this one with a more of a focus on the bear side. But it's really going to require me trying to get risk down in some fashion. All right. And then Friday before the open, there's nothing scheduled, so that's it. But you can see, I mean, like a couple big names, a couple interesting setups. Still lots to look forward to. Plus, the market is just like day after day, just some crazy, crazy moves. So lots going on. Imagine it's going to remain that way for the foreseeable future. So lots to look forward to. If you like this video and you're looking for more option trade ideas, more option swing trade ideas, more option trades for earnings reports, please follow up with the link in the description of the video for more information on options in play. Have a great weekend. Stay safe, stay well, and I will talk to you on Monday.